Perfect. Okay, traders, thanks for being here. Thanks for allowing me to come in here, Renee, with Investor Inspirations and being able to come over here and share our experience with order flow and volume. Hopefully you guys have actually enjoyed, give me a second here, I'm going to mute the mics. I've got a few people here with their mics still on. I'm going to mute them. Excellent. Okay, guys. Hopefully you guys have learned a lot of valuable information. Have you guys enjoyed the event so far? Can you guys just give me a why if you guys have taken some out of it? I'm sure there's some great speakers that came in and have been able to share a lot of their tips and tricks with trading. It's always great to learn, right? It's a learning process like anything in the life. We have to learn how to become efficient before we can expect performance. What we're going to do here very quickly, I've got a lot of stuff to cover. I can't possibly cover it in one event. And given the nature of the time constraints on these events, I'm going to be jumping through some of this material very quickly, and that's literally on purpose. So if you guys would reserve your questions to the end of the event for us as a speaker, that'd be great, because we're going to actually hold part 2 tomorrow, and we're going to give you guys a link to register for tomorrow, because ultimately today we're going to focus on order flow, and tomorrow we're going to focus on volume. And we're not selling anything here, guys, strictly educational base. If you like what we've done and you like what we're about to show you, I encourage you to join us tomorrow, where we're going to spend a lot more time going over live examples and go over more of an application-based stance tomorrow, because we want to be able to spend a little bit more time on the charts and spend a lot more time going over a lot of the information that most of you guys are going to want to see. So with that being said, guys, let's jump in here. Quick disclaimer, take a quick glance over that. If you have any questions on the disclaimer, please shoot them in the chat box or send us an email. That way we can clarify that moving forward. Need to cover that by required law, and that way we can jump into the presentation. Excellent. So quick agenda, so we can jump right into material. I'd like to tell you a little bit about myself as to why you should even consider listening to what I have to show you. I think it's important to be able to relate with each and every one of you. We're all traders in here, and we all have a like-minded goal towards financial freedom in trading. And so I'd like to tell you how I got started as a trader, where we are now, and what we're doing in the trading industry for helping educate and provide software solutions for traders. And then what I'd like to do is I'd like to talk about what I found to be the biggest challenge in this business. And I think it's actually a few topics that relate to this, but it's very important to be able to address that so we can look at how to overcome it, because I would like to think that everybody in here is at either one point in their career face it or is still facing it, which is very important to address. I'd like to show you how to avoid costly mistakes, because I've made them, and if you can learn what to do so that you don't have to follow the same path of hesitation or maybe constraints in trading, I'm going to show you what we can do to help you avoid the pitfalls. There's no shortcuts in trading, but I'd like to show you how to avoid taking them and avoid any major issues towards performance and understanding how to trade and what we can really do to avoid that. And then I'm going to show you exactly the solution as to what we use every single day in our trading room. We've got anywhere between 175 to 250 traders circling through there every morning, learning and trading order flow and volume with us. We've got a very large following, and we really enjoy being a part of a community of like-minded traders dissecting the market. And in order for us to do that, we need to use software, because it's humanly impossible for us as individuals to process the data in which we use to be able to formulate trading decisions. So there's definitely a need for what we're going to show you. But I want to show you why it's important first before we jump right into the demonstration. If you trade future stocks or Forex, it doesn't matter. If you're a scalper, if you're a day trader, or if you're an investor, it holds no bearing. Everything I show you today can be applied for any market, any style of trading. It just depends on what your preference is and basically your time perspective. You know, your risk tolerance, the size of time frames you trade on, your goal as a trader, and so forth. And then at the end of this, we're going to jump into a registration for tomorrow, so you want to definitely make sure you get the link to that. In fact, what I'll do is maybe I'll get RJ and Jen and them to put the link for the registration now, just in case any of you guys have to leave. That way we can at least get you to register first before maybe if you have to step out or whatnot. That way you don't miss it, and we can get you in there and you can see what we're talking about. Okay, so My name is Sean Kozak. I'm the owner of Golden Zone Trading. I think this is a very serious business when it comes to risk management and capital. Let's face it, we've worked very hard for our money. Let's do our best job to keep it and grow it. I don't like fluff, snake oil, or subjectivity, because everything that we do in our community as a trading provider and vendor is to basically remove subjectivity as best as possible. When it comes to money management, when it comes to trade signals or systems, when it comes to performance and statistics, I think it's very important. And to kind of give you some type of substance to that, yes, we use software, yes, we use advanced analysis, and we have strategies, and we have education, but I think that it's very important to be able to have an edge and statistically prove that edge and back that up. So this is the last 606 trades I've taken in the trading room and pre-market of the trade room with the strategies and the software that we're going to show you today. And you know, the nice part about it is trading very small size, reasonable position sizing, because we like to teach on small size first so that traders can learn how to trade small accounts before they can learn how to trade large accounts. And you'll notice if we look at the equity curve, it's not a straight line to the moon, guys. It takes time to go up, but it does go up. And when you do have pullbacks, they do not stay in negative territory, right? We can limit the exposure to the drawdowns, and we can teach you how to scale out of them and money manage yourself to Nick, that's about a year. Let me go back to the start of that. We'll go back to the actual log, and I'll go back to the very first log in this, and I think it was February 4th, 2015, just over a year and a half. Now, mind you, this is just trading 3 days a week, 2.5 hours in the morning, from about 7:30, for about 3 hours in the morning. And you'll notice these 3 trades I took today in the trade room. It was a very slow morning for me this morning. I was very passive, very conservative with the FOMC. I wasn't looking to hit it out of the park. Nice trade pre-market on gold, and then took a stop out on the bond market, and then the YM was just a quick scalp. But ultimately, it wasn't about trying to hit it big today. It was about being very careful and looking at that. Statistically, if we were to go over and take a look at the analysis, the ROI on this, you know, we started with a 25K account on this to keep it very small for position sizing, and then you can see we're at a pretty decent amount with a return on investment. You can see the numbers there. What's more important is looking at the payoff ratio and the winning percentage with regards to consistency. We're not trying to be perfect. We just want to have a long-term sustainable edge. The markets do not care about perfection. They just want to make sure that you can at least participate in them in the long game, right? It's not about the sprint, it's about the marathon. And we're very big on stats, guys, very big on proof in the pudding. And if you have any questions about this should give you the credibility to at least take an hour of your time to show you what we do as professional traders, okay? So, like most of us, usually don't start in trading. We usually come from a different career unless you were born into a trading family. Worked in oil and gas. I went back, did a degree in finance, wrote my broker's license, and then I struggled drastically. As all traders do, unless you're a very fortunate individual. For me personally, I think the biggest pain that I took was just shy of a $30,000 loss on a trade in about 15 minutes, being very aggressive, right? And you know, I was fortunate to have the capital to take that hit, but I didn't really like the way it made me feel. So at the end of the day, after 2 years of beating my head up against the wall, I realized there has to be something different because it was becoming insane. And I don't know if any of you guys can relate to that, but if you are struggling, type a Y in the chat box. We're the only ones that can see it, because you're in the right place, because I'm going to show you what we do that helps people in those situations. For myself, it was about looking to hire and seek out people that actually had what I wanted. I did not want to struggle anymore. I knew that I knew a lot about trading, but I did not have the skill sets at that time to be a professional trader. And what really got me out of that rut was surrounding myself around people that really knew what was going on a lot more than I did. And it was about being willing to change, essentially, right? So I was taught by former institutional traders on some of the biggest exchanges in the world. Fortunate, it cost me a lot of money, but it was the best decision that basically springboarded my career as a financial trader. And as a professional now, been trading successfully just under a decade, and basically our team that is basically defined by the Golden Zone Trading brand is ultimately comprised of strategy developers, software programmers, traders, and you know we've got a large exposure on the NinjaTrader side. Our software solutions are primarily designed for NinjaTrader application, and you know, we love working with traders. And the best part about this, moving forward, I would encourage you to join us tomorrow morning. Absolutely free. If you're interested, come watch us trade futures. If you're interested in watching a futures day trading room, you can sign up for a guest pass. goldenzonetrading.com. Okay, I'll get RJ to put the link in the chat box here. First name, last name, email, join us. Absolutely free. We'll let you come in, take a peek around, watch us trade global assets. No gimmicks. No funny processes. Just come in and watch professionals trade. We're going to trade with you. You'll see us trade. You'll see me analyze correlation in the markets, and hopefully you'll get a better understanding of how we actually piece some of this stuff together. Okay, I think it's best to learn through demonstration rather than information, because most people are visual learners, and it doesn't matter what we know, it's matter how we can do it, right? So let's do this, guys. Let's talk about what really matters. Knowledge versus skill. How many in here know a lot about trading, or at least you consider yourselves pretty knowledgeable about the financial markets, whether it's stocks, futures, Forex, options, right? I would like to think that everybody that's in here has at least a pretty good toolbox of information. Okay, the question becomes, is that information getting you where you want to be? Or are you where you want to be? Because it's been through my experience that knowledge does not equate skill. And really the markets do not care about how knowledgeable we are as individuals, myself included. I'm just like you guys, right? It matters as to whether or not you can do it in real time in the market. Can you perform? Can you extract an income out of the market? Right? So there's a big difference between having a bookshelf full of great books and website links saved on our computer about great resources and blogs and Investopedia and many courses and software products you've bought, but at the end of the day, is that skill set getting you paid? Right? That's the big question. And we need to define that. What's more important, knowing a lot or being able to do it efficiently? Okay? And at the beginning I asked if anybody is struggling right now. A few of you guys chimed in here with a bunch of yeses, and in reality what happens is if you're really knowledgeable but you don't have the skill sets, what's most likely taking place is you're second guessing what you're doing all the time. There's nothing worse than getting into the market, white knuckling it every single time, wondering, am I actually going to become profitable today? It's a terrible place to be when you know that you're still driven by that fear and that uncertainty. Which leads me to the biggest trader challenge, which is what I find the most important aspect of trading, is knowing whether your trade has the probability of winning versus losing. Right? At the beginning I said we all come from a different walk of life, whether you worked physical labor or in business, maybe in an office, or maybe you're retired and you have a nest egg put aside for trading. The reality is we have capital to trade with, and the worst part is you do not want to put that capital in the market unless you have some way of assessing probability of if your trade has the likelihood of winning versus losing. It's not about perfection, but there is definitely ways to quantify your edge through analysis. And if you don't, you're going to become subject or prey to those that do. And that's just the bottom line. So what I think is important here, and what I think is going to be the driving force for change for a lot of you guys that adapt some of the things that we show you here today, is whether or not you have an edge over who we trade against. Now, nothing bothers me more in this business as a trader, because I once started out years ago learning from people like myself, and in reality, I used to hear all the time we're competing against the banks and the institutions and all of this stuff, right? Well, in reality, we're competing against everybody because it's a fair market. And the only difference is the bigger traders and those that have a lot more resources and capital, they just have access to more resources and capital. Really, and there's no competition because they are the ones that set the market. So we need to have an edge to be able to participate with them, is probably what I would refer to saying being more accurate, because they set the liquidity and they set the market for what we trade in, and it's important for us to know that we have an edge that can actually last in that environment. Okay, so what I'm going to do is I'm going to show you what that edge is for me, and what that edge is for the thousands of traders that we've serviced over the years using our tools towards order flow and volume analysis. The main product that's discussed here moving forward in today and tomorrow's events is the print profiler software. And it really is just that. It analyzes print in the market and it analyzes volume profile. So hence the name print profiler, which allows us to look at 4 main categories of information. We're going to be able to look at trading signals that are derived from order flow analysis. We're going to look at order flow aggression so that we can track institutional and hedge funds and big banks, basically their decision making, right? We're not competing against them, but we need to see what they're doing so that we can essentially assess the sentiment of what they're setting in the market. They're going to create the market. We need to see what they're doing so we can jump on board with it. There's no competition. They will win every time. But if we can participate with them where we're not competing against them and we can do exactly what they're doing to some degree, you have a much greater chance of taking success to the long game. And then tomorrow we're going to look at volume profile, because today we don't have enough time to bridge the volume gap, so I think it's best that we focus on the order flow today, and then we can transition over to the volume in tomorrow's session. Okay? Give me a why if you guys are with me. Okay? Did I lose anybody so far? We're going to start jumping into some complicated stuff here, but I'm going to make it very simple. That's the whole benefit of me, because I've learned over the years how to take very, very complicated information and make it very, very simple to trade. That's the whole point of what we're going to be discussing today, because humans are not capable, physically capable, of processing the data that computers can. So we have to realize that we are in an environment, okay, we are in an environment that is driven by technical advancement. And if we're not willing to adapt to that, we're going to get left behind to traders that actually have adapted to that, that have the ability to use these advantages. Okay, so let's talk about the order flow process. How many of you guys have ever heard of the time and sales window? Let me go in here and actually basically pull up what a time and sales window looks like very quickly. I just want to basically explain why this is so important. And we're going to just pull up, maybe we got the S&P in here, we'll be able to see if the S&P has any movement coming in here. 416, I don't know if they got it. I haven't got any order flow coming in here or not, but might not have it. Let's see if we've got anything coming in for gold. Yeah, we got some order flow coming in for gold. Very, very limited, okay? And this is basically tracking executed order flow. So during the live markets when it's moving very, very quickly, and the market is basically moving very, very fast, okay? What's going to happen is you're going to have a whole bunch of numbers coming through here that is basically painting the picture of executed sentiment. Institutions, hedge funds, retail traders, you and me, everybody out there that's participating is going to be placing buy and sell orders in the market. And some people are going to be trading supply and demand and support and resistance and the MACDs and the Bollingers, whatever the case may be. This order flow is moving very, very quickly per second. But what's happening is inside this data, there is extremely important patterns that need to be identified when we're getting ready to take trades. Because what's important to understand is when the order flow is on our side or against us when we're trading. If your order flow process is not stacked in your favor, you will always face hardship, because what's happening is you're fighting the opposing side of the market. And so what we do is we take this very complicated amount of information that's coming through, because it tells us a lot about sentiment. But if you're like me looking at this, it tells me nothing. Because as a retail trader who is a visual learner who likes to simplify trading, this to me is very complicated. And so what we do is we take the data and we transfer it to our trading charts. Now some of you may have heard this as referred to as footprint analysis. We like to refer this as tape aggression, being able to track the tape, track the order flow in the print, which allows us to be able to basically take the data and project it into our price charts. Why is that important? Because if we're trading with the order flow, we're going to be able to transfer that data seamlessly to our charts, which cannot be done humanly. It has to be done via computers or algorithms, and this is what I mean by, adapting to the advancements of technology in the financial trading industry. And so what we do is we have patterns that are going to present themselves in the market all the time based on order flow. And rather than try to look for them yourself, what we do is we transfer that data onto our charts with buy and sell signals. When these patterns are met, when these patterns are true on the bar in which we're trading or we're looking to execute a trade, we want to see the arrows print on our chart. And I'm going to grab a cursor very quickly here. We're going to go quickly through this so we don't take too much time on one concept. But you'll see there's an arrow right here, a little green arrow. That's a buy signal. That buy signal is basically looking at all the numbers that are transferred from the time and sales projected onto the price bar, and basically when these signals are true, all that matters is subconsciously we say to ourselves, this data just came from order flow that was basically identified through pattern sequence. And if we're going to take a trade, wouldn't it make sense to get into a trade when the order flow is stacked on our side as opposed to against it? I would like to think so, right? So it's very easy to see it. Now what's nice about it is now we don't need the time and sales. So we're removing that noise of having to look at more information. And you don't even need the numbers in the charts. These can be turned off. We're going to show you some examples here after. All you need to know is the arrows and what they're telling you and the information that's being displayed. It's very simple and easy to trade. It's very simple and easy to learn because the whole goal is to understand what this arrow is derived from, what these signals are coming from, right? Because if we're going to have buy signals and sell signals in the market, we want to make sure we can trust them. And the only thing that I found in 10 years to be efficient is trusting order flow because it's the beating heart of the market. Okay? So what I'd like to do is I'd like to explain a few things that are important to me when using order flow. First of all, okay, if we're going to trade something, it needs to be easy to learn. And we need to be able to trust it. As I said earlier, if you're going to take a trade and every time you take a trade you're second guessing what you're doing, you won't trust it. And most people will not trust something unless they've actually had success with it, which I don't blame you. But if we're going to use something and basically go through the trial and error process, wouldn't it make sense to use something that has a proven substance and it actually has something that is driven by what's driving the market, which is order flow and volume? Okay, so these signals are going to be derived from something that really is what makes the market. If you guys have a MACD on your chart or a CCI or an RSI or a Bollinger Bands or any of these other indicators, the reality is those all are derived from order flow. You can't have price moving unless order flow is dictated. And basically what happens is once that order flow exchanges and price moves, then your indicators can print. So all rudimentary tools are after the fact of order flow and volume. So by using this, we can trust that we're in front of everything else that people are using that are behind the scenes. Okay. Let me give you another example. This is a trade setup that took place yesterday on crude oil. You can see there was a buy signal before this, but the next signal was the one that was taken. And this is a simple, easy, clean setup. You'll see the numbers are not in the bars this time. We can remove the noise if you're not comfortable looking at numbers. And basically, once the arrow prints on the chart, you wait for the close of the candle so that you can get into the market because we want the bar to confirm that the order flow is true. Okay. And yeah, that's because we have to expand the size of the brick, Frank, to put the numbers in it. But technically, it's only a 10-tick bar. Yeah. So this can all be explained through easier demonstration on the charts. But you can see here, very clean, very simple. Obviously, these signals are going to be much stronger when you're trading with a directional movement. So you want to be buying the buy signals in a directional move. You can trade counter trend, but it's going to be harder for you to basically catch bigger trades unless you catch the big reversals for the day. So it's much easier to take the trade signals that are in flow of the market. Okay. Now this is going to help you stop your second guessing because all that's really happening is you're just saying to yourself, I need to wait for an arrow to print so that it's an order flow pattern that gives me the edge that I need to be able to get into the market. And there's no need for me to be buying and selling the market in any other place until that pattern is true because that just means that the order flow is not on our side. Okay. Now, this is an example this morning, the Nasdaq on a delta signal. This delta signal is just a different variation of an order flow signal. We have 3 signals that print in our software, and this is the whole point of the video training and the user manuals that we teach you, because ultimately it's just knowing which signal you're looking for and then identifying what it's telling you and then executing it. So this was this morning just before lunch. There was a delta short signal. You'll notice there's nothing else in the price bars but the arrow above it. So if you're somebody that really wants to just strip away the noise and wait for that confirmation, these signals will give you a clean setup that are going to basically be taking the order flow sequence from the tape, transferring it into the price bars, and all you're doing is waiting for the opportunity to strike. Okay? Now obviously we need to learn trade management and setting your targets, but the first thing we need to focus on is why are we getting into the market? And if we're going to get into the market, do we trust why we're getting into the market? That's a very important aspect, right? I said earlier, we need to have an edge over who we're trading with. If you're using order flow, you're already at the top 10 echelon of the traders that are participating in the market, which is where we should be if we expect to be consistent. Okay. Now, the end result is you're going to basically expedite your limitations towards fear and greed, because if you're knowing that you're not having to get up in the morning and get into the market without knowing what you're doing, most traders are going to be facing the market with fear or greed because they're either not experienced enough yet, they haven't built the skill set, or they're very emotionally based traders, right? And the way of looking at order flow is we basically remove that by looking at logic rather than emotion, right? Order flow is like math. It doesn't lie. It's numbers that are basically dictating proven sentiment. So what we're going to do is we're going to help retrain that process towards looking at being very proactive towards being logical, not emotional. Now, I've spent this entire discussion talking about order flow, and we talked about the trading signals. But there's one other main equation here that's even equally, if not just as important, to the order flow process with trading signals, and that's being able to track the aggression of the bigger players. Okay, so we can't possibly know what Goldman Sachs or what, JP Morgan or all the guys down on the big hedge funds are actually thinking from a minute-to-minute basis. All we know is that they're going to move the market from point A to B whenever they decide to. And as retail traders, even if you're trading a very large account for a retail trader, it's peanuts compared to what they're trading with. So what we need to do is we need to be able to assess where they're doing what they're doing and why they're doing it, right? If they're going to start selling the market, we need to know where they're doing that and how aggressively they're doing that. The same thing to buy the market. So what we do is we transfer highlighted blocks into our candles, the same way we transfer the arrows from the order flow process. And what we're doing is we're tracking the aggression of the executed order flow and the size of that order flow. And we're basically looking for very, very, very large amounts of aggressive selling or buying that are coming into the market on either the buy side or the sell side of the market. And rather than having to process this manually, we're creating levels of supply or demand that are driven from aggression. Now this is very important to understand because a lot of supply and demand software out there is driven based off market structure and support and resistance swing point analysis. This is driven strictly from the print. So that doesn't get any cleaner than this because we're able to identify the true sentiment of buying demand and selling supply based off aggressive order flow. And you'll see here that when all of the aggression stacks together to the red or to the green side of the bars, you're going to find levels of supply or demand. Now why is this important? Because like I said, the bigger players are setting the pace. They're the ones that are dictating whether the market is expensive or cheap, because they're the ones that are creating the market. So they're either going to sell it or they're going to buy it at areas that matter to them, and we need to see those areas. This is an example of an area on a crude chart, took place yesterday, 10-tick range bar, and you'll see there was a block of 4 levels of aggression. Creates a very small level of supply, but you'll notice that it's about precision accuracy. Price comes back up into those areas, and the stop size on areas like this is extremely small. You don't need to risk 25 ticks to take a trade if the market's telling you don't need to. Okay, and it's all relative to the size of the charts you're trading, obviously, and the market that you're trading. But in essence, what we're doing is we're becoming snipers to the market, just like they are. And the goal here is to see what they're doing, why they're doing it, where they're doing it, so that when we go to participate, we're going into the same places they are. Not competing against them. Now we're trading with them. Okay? Take a look here. There's also the aggression down at the bottom. You'll see there's some aggression down here that created a new supply level. This trade was basically taken from supply down at 45.83. And you could manage the runner, obviously, but in essence what you're doing is you're just looking to be able to engage in levels of aggression to the sell side of the market. Because traders like you and I, we're not executing 100-lot trades in crude oil. Maybe you are, and if you have a lot more capital than I trade with, I'm still not executing 100-lot trades in crude oil. You'll see you got 100, 94, 37, and then 245 down here. Right? These are big, big players executing trade here. So when they can show us that type of information, we don't need to be paying attention to all the other stuff that doesn't matter. We just need to be paying attention to when they tell us they are becoming interested. And then when it comes back up there, within 2 ticks of accuracy, you get short and you drop the market down, right? Let's take a look here as to why this would be important. How many of you guys have ever got into the market and then all of a sudden it starts going a few ticks in your favor and then all of a sudden, bam, it stops you out? First part of the trade, you're excited because the market's moving in your favor. Finally, the trade's going in my favor. I'm making money. This is it. I get it. I'm doing it today. And then all of a sudden, for whatever random reason, the market just said, no, thank you. We're taking you. And it just takes you out. I've been there a lot, guys. I'm assuming most of you guys in here have at one point in your career. Well, what's happening is we're trading against the sentiment because we're not getting in at the right locations and we're getting in for the wrong reasons. We're not using the proof of the order flow process. We're basically getting in on random information like an indicator or an opinion, or basically a theory of the talking heads, right? You know, the news or the media or a sentimental bias, whatever the case may be. All of that is subjective. I said earlier at the beginning, my motto is no subjectivity. Order flow is not subjective. It's the information that is being dictated in the market. So if you are trading where the order flow proves to be valid, you're not going to be going against, getting trapped against the bigger players, because it's going to be basically what they're doing. They're showing you what they're doing. Okay, this is another example of crude oil. Yesterday, 10-tick bar again, 11 o'clock in the morning before lunchtime. You can see we had two sections of very, very big aggression, created two levels of demand. We call this print demand or aggressive demand. And you can see here it comes within 2 ticks inside that level and it rallies out very quickly. There's a reason price reacts here. It's not an opinion, it's a factual information. The order flow dictated there was a ton of aggressive buying here. Price can come into these areas and you can get long with very, very limited risk. Very easy to see, it's very visual, very graphically displayed, and it's very clean to trade. Now, like I said, if we're trading in a technically advancing industry, we need to have some type of inside information. I don't mean insider trading tips. I mean inside knowledge towards data. Data that's very, very critical for you to succeed moving forward as a financial trader, because the other traders that are moving the market have the same data. They are equipped with this. So as a retail trader, we need to equip ourselves with it as well. And in essence, it's going to be impossible to do this without advanced software. You will need to use tools that are designed for this to be able to give you that edge, because physically humans cannot process that data quick enough. It's coming in at the second. Every second it's just coming in with tons of information, and we need to have something to our advantage that makes it very visually clean to read and to see. Okay, so let me go into a couple charts here for a second. I'm going to paint a very clear picture as to why this is extremely important to adapt. Okay. And what I'm going to do here is I'm just going to show you, this is the Nasdaq today here, guys. This is on a Nasdaq chart. You can see here we've got some arrows here, these signal arrows right here. These are arrows that are basically coming in here, coming in. These are driven from the print. So these are basically derived from the order flow process coming in from time and sales. So what's happening here, let me just kind of give you an example of this. Price rallies up extremely large. Price pulls back. What's happening on this bar right here, okay, this single candle, not all these other noisy bars. Yes, okay, the market moved up, great for the market, right? A lot of traders are going to get greedy and they say, oh man, I need to get in. They're going to get in, they're going to get stopped out because the market's going to push them back. Or they feel they missed the move and they can't make money for the day. The goal is to not catch the grand slam. The goal is to always get in when it matters so that you can get base hits periodically and then stack the odds on your side with an edge. That's what systematic trading is all about, is having an edge and exploiting it day in and day out. So this bar, this TDL signal, is basically looking at, if we turn on all of the data, okay, that's available to us inside the software, it's looking at patterns inside all of the order flow, and it's basically spitting out a little clean arrow like that that's saying all of the selling order flow is depleted, and even though price is going down, it's going down on positive net order flow, which means that price is not supported by the order flow on this bar. This is the bar that matters. Okay, that's the bar that matters right there. Okay. That's the important one. That's today, guys, before the FOMC. This morning, this is that trade this morning that I was talking about here. And you don't need to have all the numbers in here. Obviously, the resources that we can teach you will give you the resources to learn what all of that is. I want to make it very simple first right out the gates to show you that it doesn't have to be complicated. Right? If we strip everything down and we just have a clean chart like this, how do we know that this is the bar that the order flow became exhausted on? How do we know that that's the bar that really matters? Okay, because you're going to have price moving up and down all over the place. Really, really good traders only focus on the points that matter. Now, I'm not saying that all the information that you've learned up until today is useless. What I'm suggesting is you adapt a different belief system around what's really going to drive a different view towards your trading. Because I can assure you this, if you just focus on where the order flow is telling you it matters, it's going to be the deal breaker for you. It was for me, and it's been doing so for thousands of our traders all over the world. Let's take a look at crude oil. Custom Renko charts. A lot of you guys might trade on custom bars, right? Let's turn the print off so that we're not looking at a whole bunch of information. Okay. We're in an uptrend. Very simple. Higher highs, higher lows, right? Trending environment. We keep it as simple as possible. That's the bar that matters right there. That bar. Not every other bar that happened. Yes, there's runs and retracements, right? This is the bar that matters. Why? Because as price traded down into that area in an uptrend, the order flow became exhausted to the sell side, and that provides a superior advantage to buyers in the market. If you're able to just patiently wait and get long on this bar, you're going to be rewarded by basically trading in the right locations. Same thing here. We had a buy signal here, buy signal here, buy signal here. Okay. This just ended, current trading day. Okay. This morning, off the inventory report, market got slammed down this morning. This signal here was a sell signal in a downtrend. Okay. Take a look at this head to shoulders pattern. Left shoulder, head, right shoulder. What's really powerful is that you have the right shoulder that's supported by a very powerful order flow signal. This can be used in any form, and I'm going to explain why it's even more powerful, because how many of you guys in here are trading with indicators right now? Can you guys just give me a why if you're using some form of an indicator to make your trading decisions? Give me a why if you're using indicators. We've got a lot of traders in here, so participate with me so I can really help you here, because I want you to leave here with some substance. Something that actually you can leave here today to really think about, like, wow, this stuff is completely outside of what I've ever seen before. Okay, so we've got a lot of people in here saying yes, okay? Well, let's talk about this for a second. How many of you guys have heard of the good old Bollinger Bands? Okay, you guys have heard of the good old Bollinger Bands. Forget all the other arrows on the chart here for a second. Give me 1 second. Nasdaq. Okay, let's do that. Let's clean this off here so it's easy to see. Okay, I'm going to basically just turn off all the numbers and just look at the arrows for a second. Okay, let's say you're a Bollinger Band trader. Very, very base level way of trading. A lot of traders start here, or they start looking at mean reversion trades or trend trades with standard deviation, right? I want to explain how a lot of traders get crushed in the market. Most people are trading, and we're going to turn the numbers off, keep it simple, right? Most people start trying to buy or sell the outer bands as a mean reversion trader, because they're taught from the beginning of their, education process that as price gets outside the outer band, you want to buy it because it's becoming extended. And then what happens is that, wait a second, now I'm taking heat in the trade. Now I'm taking heat in the trade. Now I'm taking even more heat in the trade, right? When does enough become enough? That's the question we need to ask ourselves, right? Let's go over here to another example. I want to find an example that is really important right here. Let's go and find it. When does enough become enough, right? You would have been crushed on that move, right? Right here. Great example. So you got all these different moves happening all over the place, right? Here, right? You would have been getting crushed here as it's dropping because you're always going against the market. Let's take a look at this one. The market's going up. A lot of people are going to start selling short here, and they're going to get their stops hit. What's going to happen is it's going to push up, it's going to push up, it's going to push up. Right here on that bar is where the order flow inside the tape started to say this is extended and we're actually going to start selling off. Okay, that's the counter trend trade that you should be taking, because this is a counter trend way of trading, taking the outer band, riding it to the mean. You see where I'm going with this, guys? Use the order flow to qualify any other signal that you're using. If you combine order flow with trend lines, if you combine order flow with oscillators, momentum tools, you are going to stack the odds drastically in your favor. No different than if you're a trend trader, right? You're going to sell the pullback to the 20-period moving average as price comes back up. You don't want to be selling it on this bar. You want to be selling it on that bar, because that bar gives you the confirmation that we have the substance behind it. You have the ability for it to drop, because the order flow is proving that as prices are going up, the tape is saying that the sellers are depleted. Okay, let me give you another example. Anybody in here trade breakouts? Anybody here trade breakouts? If nobody in here trades breakouts, I won't show you an example on breakouts. If you do trade breakouts, I'm going to show you, but I need a few people to at least step up and say yes. That way I can show you an example. So I want to make it, cater to you guys. I want to give you examples that actually matter here. This is a swing indicator, basically mapping out the swing highs and lows. A lot of times traders are going to trade breakouts off the swings. Okay? And what happens is a lot of times traders get faked out. We call them fake out breakouts, right? An example would be if the market's going to break out right here to the downside. If we're going to break out, we want to be supported by substance, right? If the bigger traders are going to break out, we want to see that they're stepping in on a breakout. Take a look at all these red blocks in this bar. That's institutions slamming the sell side of the market. That's a breakout you want to be participating on, because the order flow is dictating that. As the market's trading here, you're going to start to see all these highlighted blocks, showing that sentiment that this is an actual breakout that has substance, right? Even though this went up, I would never trust this breakout. There's not enough substance here. Even though it went up in hindsight, I would never take a breakout trade here. There's not enough substance, not enough big aggression. There was enough here for a small base hit for us to take a breakout here. You can see, look at this breakout of the swing. Took that structure low out, and there's a lot of aggressive selling in here. Okay. Very, very important to know how to use order flow to confirm your decisions. This one's my favorite. How many of you guys use overbought and oversold indicators like CCI or stochastics or RSI? How many guys are using those? I think everybody's using them to some degree. Okay. Well, how many times have you guys got into a trade and all of a sudden you can't figure out why the crossover didn't work? Anybody? Anybody in here ever figured that, you're in a trade and the crossover didn't work and you got stopped out? You're like, well, it was overbought. It was oversold. Why didn't it work? Because overbought and oversold indicators are driven from order flow. So unless you're confirming it with order flow, you're late. You're late to the party. So let me kind of give you an example. I'm going to go back and we're going to just take a look. These were actual crossovers today. This is a 10-tick range bar of gold. Let me give you an example here. This white line, I drew this here on purpose because I wanted to show you that there was a crossover here on the next bar. We don't have any order flow signals on the price bar. See, there's order flow signals other places, but not at the time where you would most likely be trying to buy that pullback. This is a pullback in an uptrend, and normally you're going to want to buy a crossover in stochastics, right? You want to wait for that crossover to get long the market. Well, didn't really work for you. It went sideways. Okay? And what happens here is we come back down again, and then wait a sec, there's another crossover. Okay, so if you didn't buy this one, this has to be the crossover that's going to make it pop. What happens? It doesn't really work for you. Okay, well, this one here has to be the fact, because this is the third crossover in a row. Eventually the buyers are going to be oversold here. I mean, or the sellers are going to be oversold. We want to buy the market. Doesn't really do it for you. This is why using indicators over the long haul, they're going to make it much harder for you to attain the success that you're going to use. Okay. Let's take a look at this. You've been there, Ronnie. Yeah, exactly. Okay, take a look at this crossover, another crossover. We were looking at these ones. Let's take a look at this one. Do we see any buy signals on these bars in here? This one, late to the party. Crossover happened here 4 bars back. We're not getting in here. Okay. let me kind of explain how to use this to your advantage. Same thing here, right? You're going to buy this, you're like, okay, we're heading down. The crossover happened right here. So we have to get long here because the stochastic says we should be getting long, right? Nowhere in the order flow is it depicting that the buyers are going to be controlling this price bar. And you get crushed. So how do you use the order flow to confirm what you're doing? Take a look at these ones. The white lines were the failed signals that you would normally take following the indicator, which to me makes no sense at all. And these arrows are the ones that matter. Take a look at this bar here directly correlated with this crossover. This is a crossover that is driven by an order flow backed signal. You're using order flow and you're basically going to confirm that. Okay? That's the crossover that worked. Same thing here, we get a crossover down here. At the exact same time, we have an order flow signal. Remember where this data is coming from, guys? Don't just trust it because it's a buy and sell signal, trust it because of where it's coming from. Okay, it's coming from the print, which is a true read of executed order flow. It's what's driving the market. Okay, so if we're going to trade something and trust it, we want to make sure that it's backed by something that actually has logic, not opinion. Okay. Now I could show you examples of this all day, but I'm telling you that once you use this and once you see this in action, you're going to change the way you look at the market for the rest of your lives. Okay. So let me go in here and kind of get to the conclusion of what I'm about to explain here so that we can let you enjoy the next speaker. I'm sure you're going to learn a lot from him or her as well. And I hope we've sparked your interest for you to want to come to tomorrow because we're just going to add to this. Now, I'm not big on written testimonials. I don't think that they really do enough substance. I think that if you're going to have a better impact of some type of trader experience, at least hear what they're saying. If you go to these two links, RJ, I'm not sure if you have access to them. If you want to put them, take a screenshot, you can type them into the URL. There they are right there. There's some video interviews of traders that are trading with us on our trading systems and using our software. And I think those are going to be a better testament towards the success of some of the traders that we've worked with. And it's just the tip of the iceberg. I mean, we've got thousands of order flow and volume traders around the world. I mean, for us to interview every one of them, we wouldn't be able to run the business and trade. But nonetheless, I think it's a great start. And that'll give you guys something to watch if you're interested in seeing how we're impacting other people like yourselves. And I wanted to share this with you. This is interesting. This happened 5 days ago. This was sent to me in my Gmail account. You guys says, not too shabby, I think I'm done for the week. See you Tuesday in our strategy class. And you know, he hit his daily goal within 3 trades, and we teach them to stop trading, right? Using order flow, right? Depending on what your goals are, your goal might be to make $1,000 a day, your goal might be make a 500 or 100 or whatever the case may be. Stack the odds in your favor by using tools that can give you the data that most of other traders don't have access to. Okay, and it may seem complicated and it may seem overwhelming at first. I can assure you the resources that we've created for training and for helping you get off the ground running is extremely easy to understand, and we've got an extremely interested support team to make sure that they're vested towards the success of you using our tools. Okay, so let's do this. Join us tomorrow. Right? No purchase links, nothing like that, guys. If you're going to use something, at least come and be exposed to it for a few sessions. Let me explain what we're doing and how it works, and then if you're interested, you know, make an educated decision as to whether or not this is right for you. Because ultimately, I think that it's always good to do some due diligence and make sure that you're making a sound decision. Okay, so. The links, RJ, if you want to put them in the chat box, we're going to be talking about micro and macro volume tomorrow. We're going to add to this because this has just been based on the order flow process, and we're going to look at volume profiles. We're going to show you the exhausted volume trade setups tomorrow so that you can put these in your toolbox and leave the week trading looking forward to next week's opportunity. Okay. Now we will be providing a discount tomorrow for those of you that are interested, but we'll worry about that later. I'd just rather have you guys come and join us and see for yourself what we can show you. Okay, traders, so if you have any questions, there's sales@goldenzonetrading.com. You can contact us on our website. And don't forget to sign up to our trade room, right? GoldenZoneTrading.com. It's free. You come in, watch us trade tomorrow. Win or lose tomorrow, whether it's a good day or a bad day in the markets, because not every day is perfect, you're going to see me trade. We're a trading room. We're not a chat room. Okay, so look forward to having you guys there. I want to thank the team for inviting us in here to speak today. It's always a privilege to share experience with other traders, and hopefully you learn something from that. I enjoyed being here. Thanks, traders.